So there's been some change up in the team. But as you all know, I've advocated royalty companies for a long time. I was so fortunate as a young analyst to take Franco-Nevada public. And I had no idea, to tell you the truth, that it would be such a significant company. And then when it went away, and merged with Newmont, I was involved with the seeding of the silver Wheaton. There was a spin-out from Wheaton River and the whole concept. And I remember saying that when Hive came along, I said it felt like another silver Wheaton opportunity. Because when you look at these businesses, they have high profit margins. They have more revenue per employee than Goldman Sachs does per employee. They make investments, which is difficult for a lot of gold fund managers that always seem to knock the royalty companies, and I just have no idea why. But it's such a superior business model that I went and launched a smart beta ETF, which is 30% royalty companies. And it rebalances each quarter, and then I mix it with other sort of a quant approach. But the royalty companies are so much more stable. In fact, what happens in these capital markets when we have these big downdrafts, they fall less. And then they rise with the markets at the same rate when we get a run in gold or silver. So over time, they've been far greater performers. And so I think it's important for you to recognize they're in a unique position. There's been many more junior companies trying to become a royalty company to be able to tap capital markets. But I think it's very difficult. Warren Buffett loves a business that's barriers to entry are very high. And when they put a royalty on a property, the barriers to entry are very high for someone to come in and compete. Like someone can easily compete with another mutual fund or another ETF. It's very hard to compete when they've bought an asset which they think is going to last 30 years and they finance it only for 10 years and they get the other 20 free. And so the returns on capital look low at first, but any type of a long-term project, they're phenomenal. So I'd like to start off with Sean to talk about the Osisko story, but you know it's really unique. How many here saw the movie Blood Diamonds? All right, good. Well, Sean was one of those characters that was there. And so I asked him to sort of tell a story that gave him the resilience, the toughness, that when he came back to build in Quebec, he said, this is a piece of cake compared to Africa. And that's what's really important. It's the quality of the people. These are very unique companies, a high revenue per employee, a unique set of traits of relationships and intellectual capital. So Sean, please.
Well, thanks, Frank. I guess I'll try and fill in a few of the blanks here for those of you that don't know me. I started out. I went to the Hillbury School of Mines, which is a school in Northern Ontario, and I paid my way through school as an underground miner. I became a diamond driller because there was no jobs in engineering, and then I moved to Africa in 1987, and I worked in West Africa from 1987 to 2000. I ran exploration projects all across the Birimium, which would include Côte d'Ivoire or Ivory Coast, Ghana, Niger, Burkina, Mali, into Ghana and up Sierra Leone, and across the whole West Africa scene. And we were a little bit ahead of our time. Things were tough at that point in time. Ivory Coast was evolving. Houphouët-Boigny passed away in '94. The country headed for civil war. So after that, I thought things would be easier if I went to Niger. We built the Etruscan portfolio of assets. I worked for Placer Dome, for Echo Bay, which are now a lot of the assets that are the foundation of Endeavour Mining. And in that scenario, I spent 13 years living in Africa. Times were very interesting. Went through 2 civil wars, 3 coups d'etats, 4 hostage takings. I was never a hostage. I was the guy that was trying to get people back. So I never had that aspect of it. But needless to say, it was a pretty adventurous time. Things in Africa were going crazy. It was the end of a lot of regimes and a lot of colonial sort of president for life types like Houphouët-Boigny, and the Congo was coming undone. Lots of things were going on in West Africa at the time. The Somalian War, the Liberian War started up, which led to the Sierra Leone War, which eventually spilled back into Ivory Coast, which had a civil war. And then I was there the first day that Burkina Faso, Blaise Compaoré was president, and ended up spending face down on the pavement for a night as that coup d'etat put Mr. Campari in power. And then I was in Niger for 2 coup d'etats, back to back, year and a half after year and a half, and we managed to build the Samir Hill project and a bunch of other projects that later went on to become the Endeavour assets. So I moved back to Canada in 2000 because my wife was pregnant with our daughter. And we started Osisko in 2003, and we got the Canadian Malartic project in 2004. And that led to be Canada's largest gold mine, and now 17th largest gold mine in the world. But it had its challenges. We had a town to move. We had some permitting challenges. It was the biggest open pit gold mine that had been built in Canada to date at that point. So it faced a lot of uphill battle from market acceptance. But I thought that, as Frank had said, compared to coup d'etats, civil wars, and a few various different sort of blights, and famines, moving 250 houses in northern Quebec and building 6 institutions, including a school, looked like a much easier task. So we did it. We spent $1.1 billion to build Canadian Malartic. We sold it for $4.1 billion. And then we created the Cisco Gold Royalties by taking a 5% royalty on Canadian Malartic, which gives us about 30,000 ounces a year of zero-cost gold. And we created the Cisco Gold Royalties, which we IPO'd in 2014 at the sale of the mine, which had a $500 million market cap at listing, and now has a $2.5 billion market cap, and we now have 130 royalties. And we've also incubated another $1.5 billion worth of companies through Osisko Mining, Osisko Metals, Falco Resources, Barkerville Gold, and Strongbow Resources, IDM. In total, we've created about $9 billion of market cap since we started this voyage in 2003. So it's been a wild ride, but Africa was a good place to toughen up. It was a good place to learn a lot of lessons about people and learn a lot of lessons about what a good jurisdiction is and what a bad one is. So, Frank, that's my
fantastic.
summary.
It's like a Monty Python movie. What arm? Paul Brink for Franco, Nevada. Can you sort of walk through your genesis, the story with the company and your experience? And
Sure. I don't have a story that's anywhere as good as Sean's about myself. I started off as a banker working in Switzerland. I was then an investment banker working for BMO in Canada. And that got up to the end of the 90s when mining was dead. It was the tech boom. I gave up on mining. I went and joined a couple of guys doing private placements. And we ended up running a tech company for 5 or 6 years. And the first part of that was brilliant. It was the boom. We raised some money, got a company going, and then it crashed. And that's probably where I learned one of the best lessons of my life. And that's what it feels like to be in a small company trying to raise money. And we had 3, 4, 5 years where we did a lot of friend and family rounds trying to scrape every dollar together that we could. We finally got a company going, and it was a decent little company, but we weren't going to the moon like we thought we would. And so I looked around then, and at the time, Newmont was hiring. Pierre Lassonde and David Harkwell were running the corporate development there. Pierre was the president, and I went and joined Newmont. And so my story really is about just having your butt in the right place at the right time, because within 2 years, Newmont decided they were going to sell or spin off the royalty business. Franco-Nevada, David and Pierre put their hands up, and we were able to take the company public again. But this is where the good story is, and the story's not really about me. It's more about David and Pierre and Franco-Nevada. So we were preparing for the IPO, and I was put in charge of dealing with all the bankers and the IR people, and we worked for weeks and weeks. We had a wonderful pitch book, a lot of PowerPoint presentations. We were going to go on the road and do the IPO. And we started off in Paris because Franco had a heritage of having a lot of French investors. And the first meeting was set up in the Ritz in Paris. It was a lunch meeting. And we sat down. I had my pitch books ready and went in for lunch. As we went in, Pierre was saying hello to everybody, kissing everybody on the cheek. It was like an old family reunion. We sat down, had lunch, And as we're getting near the end of lunch, I thought, okay, now this is where we're going to stand up. We're going to give the pitch, and we'll put the slides on the screen. And at the end of lunch, Pierre just said to everybody, I just want to let you know we're back, and I hope you'll invest with us again. And we stood up when we left. And I thought, he didn't even give the pitch. Like, we didn't even open the pitch books. And we got in the car. The banker was Matthew DeBow, who's the BMO banker, and we're driving off to the next meeting, and Matthew's phone rang, and he said, oh, Pierre, you got your first order, $300 million. And that's why I realized in this industry, it really is track record that matters so much, and the track record comes from the people, and at Franco, we're blessed with Pierre and David, who've had such a great record at making mining investments. And also my role has been business development. The group of us that have to work on the deals and present them, the toughest thing that we have to do is sit in front of our technical committee, and it's the longtime members there have been Graham Farquharson, one of the best-known consultants in Canada, Louis Gignac, who's been one of the most active and still one of the most active mine builders, now Catherine Farrow. But our trial by fire really is every time we got to sit in front of those people and try and convince them that what we're investing in is a good investment. And it really is those people that have allowed us to be successful.
That's great. So now I'd like to ask Gary to tell the story and your experience, because I have a wonderful, it's a great story being in the ground floor of the creation of your company, but you have basically mobilized some really phenomenal individuals. Go ahead, tell your story.
Sure, I'm the CFO of Wheaton Precious Metals, originally Silver Wheaton, and I agree with the gentleman in the second row that there's no way that my story would be anywhere near as entertaining as Sean's. So I'm going to save that. I actually wasn't at Silver Wheaton at the inception, but I've been there for about 10 years now. And we're the guys that invented metal streaming. And it was invented basically by Gold Corp as a way of raising financing for their plan to build a gold mining company. And they had this asset called San Dimas located in Mexico. And it produced an enormous amount of silver, but they were really focused on the gold. And at that time, silver companies were trading at much higher multiples than gold companies were. So they had this brilliant idea that if they could isolate the silver contractually and transfer that to another party, that they might be able to create an entity that they could IPO and help them raise funds to execute on this gold mining growth strategy that they had. And it was a incredible success. They ultimately raised, I forget what it was, over $2 billion through the sale of Silver Wheaton shares for a mine that cost them about $300 or $400 million originally. So it was a great success, and at that time there were really no employees of Silver Wheaton, and they slowly started to put some people in place, and I kind of joined just before, it was about 2008, just before we really started to grow. At the time, I think the guys had thought that this was a one-trick pony, that this metal streaming strategy that they'd created would never take off. And then Lundin Mining approached the company and said, I would be interested in seeing what you could do relative to a mine that they were looking at buying, and we did a deal with them, and then Glencore came knocking on the door, And we now have interest in 29 different mining assets located in 15 different countries with 12 different counterparties. So we have a very diversified portfolio, and the whole streaming business arose. We've got there's more than just Wheaton Precious Metals now out there that are doing streaming deals, and streaming now forms I would say a critical component of a lot of mining companies' capital structures, and it's always considered when mining companies are thinking about raising capital.
So our next speaker, Nolan, has not been able to make it, so Ephraim Cassini is going to tell the story. But I think Nolan came from Silver Wheaton.
Yeah, that's a great segue, everyone. My name is Irfan Kazemi. I'm the CFO of Sandstorm Gold. Just high level, I'm a mathematician by background and chartered accountant, chartered financial analyst. And I was able to join Sandstorm about 7 years ago, a year or two after it formed. And I was at a position where I was on the verge of becoming partner at our firm. And the person who came and approached me was Nolan Watson. And he said, Irfan, I've got this great model, great business, and a fantastic management team. And I want you to leave this promising career that you have and join us. And we just started. And so to tell you about why I joined Sandstorm really came down to this individual, Nolan. He was the first employee of Silver Wheaton, which became Wheaton Precious. And he was the youngest CFO of a multi-billion-dollar company that was SEC registered. And he's had over 12 years of experience investing in streaming and royalties. He's done, as a management team, we've done over $3 billion in transactions as a team. And I think when, Frank, you were talking about the people and talking about what really drives our business, it comes down to that management team. Our technical team, I tend to be the youngest person of the senior management team, but our technical team, we really have a world-class group where each of them has an average of 40 years of experience. And that's something that's really critical when you're in the streaming and royalty business, is who are the people making those technical decisions on those mines, who have actually been to so many projects around the world, knows what works and what doesn't. And over the years, we've had a lot of great investments based on the advice of our technical team, ones to make and ones to avoid. And it is a very unique group. So that's really the background. We've been only around for maybe 8 years, but over those 8 years, we've acquired over 170 assets, and we're continuing to build optionality into our portfolio, and we tend to be one of the younger companies in the royalty and streaming business, but we've made significant progress over the last few years.
Great. So Sean, can you I hope you get a good flavor for this, the difference and uniqueness. Live in San Antonio, Texas, but I'm a Texcan, and that means you all come back A. That's a Texcan in me, but it's knowing a great coach, Greg Popovich, with the Spurs, and everyone knows the Spurs. 25% of all the coaches in the NBA had either played for him or coached for him. He's an incredible person. So you see that some of the intellectual capital from these different firms all of a sudden create other ones, and there's a camaraderie, but there's also this drive. And what I believe is that the competition really for these mining companies, so often when I've been at these conferences, is that royalty companies are bad for junior mining. And I've always been a big advocate that if Franco Nevada sends his team on there and they say they're going to do a royalty or silver precious or any of these companies here, make a due diligence and are willing to put up capital, that's a good housekeeping seal. And because they have an incredible staff of professionals. So I'd just like to highlight for each one, just take a minute to talk about how many engineers and metallurgists and geologists besides financial engineers do you have? So start off with Franco.
We run a fairly small team, but we have a lead engineer, lead geo, lead metallurgist, and a consulting geologist. And so anything that we pick up, that's the group that does the first level of review on it. And then what we try and do is figure out what are the key issues. Inevitably, when you look at a mine, there are a lot of 2%ers, and we always say, like, our answer is not going to be that accurate, so don't worry about those. Try and figure out what are the big issues, what could be the fatal flaws, and then we say, do we have the skills to figure that out? If we don't, who's the right consultant out there who can help us? And so we build out our team, try and bring the consultants, and but probably the key to our due diligence is, first thing is finding out what can really make a difference and spend most of your time figuring that issue out.
So how many employees do you have?
We're 30 people.
30 people, and what's the revenue?
They would be looking north of 600 million.
So to give you an idea, it's over $20 million of revenue per employee. The last time we did our calculations. And Goldman Sachs is $1 million. So just to get an idea of this intellectual capital. Sandstorm.
Yeah, at Sandstorm, we're under 20 employees, and our revenue is over 60 million. And we're just earlier on in the stage, so you see our company making investments now where those assets are going to start producing significant more revenue over the next few years. So our revenue is supposed to more than double in the next 4 years.
Yeah, and how many geologists, engineers, metallurgists?
Yeah, we've got a number of technical staff members. It's led by an individual by the name of Tom Brewington. And this individual, he's unique. He used to run the investing arm of the World Bank, the IFC, for mining and metals, the petroleum department there. And he ran that for many years. One of our board members said, when we were looking for a technical person, well, it'd be great if you could get someone like Tom Brewington. And we said, well, what do you mean? Who is this guy? And we had to go and move him from Washington, D.C. to Vancouver and his family. And he leads our team there. And he's seen hundreds of projects all over the world. We also have economic geologists. We also have another geologist on staff, and we just actually hired another world-class engineer who joined our team. So very solid, experienced team that we have.
And Sean?
Well, we're a slightly different group in that we run what we call our accelerator model, and that we have associated development, exploration, and production companies that are under the Osisko umbrella. With direct drive into Osisko Gold Royalties, we have about 25 employees, and we have about $100 million of revenue. But if we look across the group of companies, Osisko Mining, Osisko Gold Metals, and Barkerville, and Falco, we have a pretty extensive engineering and exploration team. Our technical division in Montreal has about 65 people in it. Everybody that was involved in the construction and development of Canadian Malartic and is currently involved in Falco Resources. And then in the associated companies there are 130 geologists operating one of the largest drill programs in the world right now with 930 million meters scheduled for this year in those associated companies. So on the top level, we have our senior technical team, but within the group, we run one of the largest technical teams in the space at this point in time, but they're not on the G&A for Osisko Gold Royalties, but Osisko Gold Royalties benefits from their intellectual capital. So we do things a little bit different because we come from an operating background. Our hall closet is full of dirty boots, and we go on site a lot, and we have the benefit of about 4,000 different site visits to different projects around the world within the group. So we have a slightly different genetic.
And Gary?
At Wheaton, we've probably got the biggest team. We're 37 employees, and we've got 9 technical people on staff. So, you know, hundreds of years of combined experience. 4 of those would be geologists. We've got a metallurgist. We've got 1 geological engineer. That's the CEO, Randy, and the rest of them are mining engineers. And, you know, at the end of the day, what we're doing primarily is investing into a resource. So it's extraordinarily important that you make that call at the beginning or the inception of these relationships, and you make the right call. You know, I think the team that we've got has done a really great job of picking the winners and avoiding the losers. And I think you had indicated that I think that you didn't think that the royalty companies could play a role with the juniors, and we have.
No. I'm a big believer that it's the best. However, there's lots of presentations of royalty companies that are not good, and I just laugh about it because I went and did an analysis of the basket of where you have royalties on, and those stocks have outperformed the index. So I do like the royalty model.
Okay. But I was just going to say, we've invented this product that we call the early deposit structure, which we've done 3 of these deals so far. They're streaming-like deals that are done with counterparties that are at very early stage, sort of pre-development. And when we bring our team down and we more often say no than yes. We've looked at about 150 of these opportunities, and we've only done three deals. But when we do say yes, it really is a stamp of approval that the market respects.
Are you surprised that there's almost 300 booths out here and 7,000 people? I mean, and so how many of
my
those companies out
understanding is
there
that
you have
this is-
royalties on?
Well, we'd be happy to talk to them all if.
And the same thing, are you surprised there's 7,000 people here and there's almost 300 booths? I mean, and I walk through and I can know some of them that you do have royalties on, and it's always great to see that. But have you had a chance to walk through?
I have.
Yeah.
It's I think this is the best turnout that we've seen in 5 to 6 years, which I think is a really good sign for the industry.
Yeah. Did you get a chance to walk through?
I walked through a bit, but I just want to echo what he's saying. People over the last while have been asking us how are things in the streaming and royalty industry, and the reality is the last 2 years have been quite quiet compared with the amount of investment that was done in the period prior to that. And the part of the reason for that is we just haven't been in a phase where people are able to raise capital and build new mines. And for all of us, we're in the business of financing companies who are building mines. And so it's fantastic to see a resurgence of interest in the sector, because this is where it all starts, and this is where the wave comes from that ultimately ends up in mines being built. So it's very exciting for us to see such great attendance.
What's your biggest challenge? Is it these funds like Resource Capital that are going to try to buy a royalty or do a financing on one of these companies, or is it each other competing for those projects? What do you think the biggest competition is for good deals?
At the end of the day, we are a source of capital. We're competing with all of the financial markets, whether that's debt capital markets, equity capital markets, private equity. So in a sense, in the one way you can say is we're all competing. Any company that's trying to raise money, they're looking for the cheapest form of capital they can find. But actually the market we've been through, there's been such a scarcity of capital that what's been difficult to do is you actually need to find a group of people who are prepared to say, here's a good project, let's all finance it. And so, we as streamers, we need the lenders, we need the private equity investors to be there, because we're not all the capital to finance a project, we're just a portion of it. So seeing great investment groups with good track records investing in companies, putting equity in many cases, so that we can also play our role in financing, you need that whole ecosystem in order for it to work.
And go ahead.
Yeah, I was just going to say, Frank, you know this, the financing industry has changed where you don't have the active fund managers who can actually go and deploy capital in junior mining space. And so you have these passive funds who are actually buying up the shares as opposed to buying new equity in these companies. And so one of the things we do at Sandstorm is we kind of have 2 buckets. The one bucket being deploying large amounts of capital in these cash flowing assets that are low risk. But also another bucket is deploying capital to the junior exploration companies that our technical team has looked at and said, this will be a mine one day, not in the next year or two, but as you build up this kind of royalties, these right of first refusals on future streams, we're building up this optionality in the portfolio that, candidly, because we're in the economic environment we're in, we wouldn't have been able to do that otherwise.
Sean? Excuse me. Thank you. Sean?
Well, you know, I spent a lot of time on that floor out there when I started Osisko. So I'm very happy to see 7,000 people here today. And if I go back to the early start of that, you know, I was out there with a 5-cent stock, which ended up being, you know, post-split and everything was about a $16 stock. And I had the pleasure of about 170 people calling me and telling me that they'd individually made more than $1 million.
Wow,
from that day on the
congratulations.
floor. So I encourage you to keep coming, and the next Osisko is out there, and the next big discovery is on the floor here. We as royalty and streaming companies have a more conservative approach to it, but we do a lot of due diligence. And if you see a royalty and streaming company sign up for the program, it's generally speaking because we have been on the ground, we've done the work, we've reviewed the resource and the reserve, we've tried to understand the geology and probably have got somewhere along the line of that. And you know, if you look at the junior mining companies that we've sponsored over the last 3 years, you know, the Osisko Mining started out with an $8 million market cap, currently sitting at $800 million with $300 million in the bank. We've been involved in a lot of these junior companies, and we continue to add them to our accelerator model. And we've sponsored and become the major shareholder in about 20 different junior mining companies in the last 3 years. So we're a big believer about everybody getting on the ground. And the Osisko policy is really simple. We run on what we call the SUDS program, which stands for Shut Up and Drill, Stupid. So
Keep going.
the more money we get into the ground, the more discoveries there'll be, the more wealth that's going to be created, and the more opportunities that we'll have to build mines and be part of the project financing. But it all starts at the drill bit. And without the drill bit and without the discoveries and without you people in the audience, you know, getting in there and taking a risk with these smaller companies and hopefully, you know, getting that 10-bagger, that 20-bagger, this whole environment doesn't exist. The passive money in the space right now is a bit toxic, I think, in terms of the explorers. You know, if we look around at the top 10 money managers in the space right now, 60% of their money in this space is passive, so it looks back. They don't participate in financing. So, you know, you, the retail investor, are a key ingredient to driving this space, and you should make the profits and benefit from this lackadaisical approach that passive management has brought to the market. And I think there's a huge opportunity if you can stay on the program and be an active partner with these companies as they move through their value creation process.
Thank you. Excuse me, please. Just want to thank all of you being here and patient and listening to the presentations. These are world-class companies. It's a world-class phenomenon coming out of Canada. Once again, 60% of all financing and mining in the world is in Canada. This is where the intellectual capital exists, and these are the best of the breed. And so make sure you just sit down and try to understand them better and their thought process, and I think it'll make you a much better investor. And thank you all.